everybody. Welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get started, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. Okay, looks like we're up and running fine. If anyone has any issues as we go along, feel free to let me know. As always, keep in mind that each trade you take carries risk with it. There's no guaranteed profit for any trade. And you should manage risk in a way that makes sense for you in terms of trade size, stop loss setting, exposure amount, etc. With that said, we do have great risk management tools within our web trader and AvaTrade Go mobile app that make risk management a lot easier, even for beginners. And so we'll look at those as we go along within our strategies as we're setting up trade examples. Also, keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Real quick, for anyone who's new to things, what is fundamental analysis? While there are different types of fundamental news that come out, basically it's looking at the news and understanding how that might affect different instruments that you might want to trade on. And so we can look at economic calendars that have regularly scheduled events. With that type of announcement, obviously we know what it's about, when it will be, etc. And we'll take a look at some ideas in that regard on the economic calendar for some upcoming announcements today and tomorrow. And we've got some advanced tools that we'll use to analyze movements around that announcement in the past, so you can maybe get an idea, statistically speaking, as to which way you might want to trade based on how those numbers come in. And then if there are other types of news that come out, unexpected headlines, war breaks out someplace unexpectedly, maybe a global pandemic, as we've dealt with in the recent history. These types of events and headlines for things that are unscheduled, while the timing and topic is not known in advance, you certainly can be ready for those types of economic affecting events with how you manage your risk and your entry points. And a lot of times putting pending orders beyond important price levels, beyond what we call support and resistance levels at strategic locations, those types of trades can be triggered when a lot of momentum hits the market. And so you don't know what might make gold break its all-time high, for example, but if you have a pending order ready to buy, if it breaks through a resistance level, maybe you can catch momentum that's created by some unexpected event somewhere down the road. Or the opposite, dropping and breaking a support level and plunging in a different direction with gold or any instrument, just using gold as an example. So unknown, extraordinary type events, you can be ready for with pending orders, just waiting for big movements to break through important price levels. And there are other ideas that we can go over as well in terms of fundamental analysis and trade strategies within our sessions. So if you have questions, you want to give input, feel free to do so at any time within the chat box there, the question box. From our main website, if you trade via mobile, we do have a mobile app with all of the same functionalities that we're about to use in our web trader. And both the mobile app and our web trader can trade on your MT4 accounts and your MT5 accounts. You can switch between them within our app and web trader. So AvaTrade Go is found in the major app stores, Google Play, Apple App Store. You can add it to your mobile device at any time. And you'll see that when you're in that app that you have the same functionalities, like I said, as our web trader. And if we log in here in the upper right corner from our main website, then we are in the web trader. Now, since we're focusing on fundamentals today, we could give a quick overview of what's happened recently, fundamentally speaking. In general, the investors were waiting to see, specifically out of the US, how strong is the earnings data that's been coming out. It is earnings season for a number of companies, the quarterly reports that come out, and the tech companies specifically have been doing much better than expected. Some of the banks as well. You can imagine with the higher interest rates and more reliance on credit card debt, banks are raking in a lot of interest. from that type of situation. And so some of the banks also have had better numbers than expected and could moving forward. So some of this data is leading to some fear on the markets that, hey, these interest rates that were brought up so drastically in the US and other places to try and bring down inflation, maybe those interest rates are going to have to stay up for a while if the economy is still doing so well. If these earnings numbers continue to be so strong, how can you dial back interest rates without fear of inflation going right back up? And so, it's a weird situation where those who want to maybe lower interest rates down are hoping for worse than expected data out of some companies and economic reports to help ensure that things have slowed down enough that interest rates can come down. Now, for now, the markets have been trying to reach all-time highs on some of the major indices recently, and that's a testament to how well some of these companies' reports have shown with earnings numbers and alike. But now there's maybe some fear about what that means in the bigger picture with interest rates. And so today I see the volatility index is up a little bit. We see fear is there a bit. Maybe the futures are down a little. And so that's kind of the situation where we are. Is there's been a lot of upward momentum with the positive numbers that have come out, but there's some fear there about it as well as to what that means with regards to interest rate decisions moving forward, and for how long will high interest rates be held in countries like the US, who drastically increased interest rates to try and bring down inflation. And so with that as a backdrop, understanding there's been upward momentum on the equities, meaning the stocks and the major indices, but that there seems to be a limit to that momentum because of the interest rate situation and fears about will they be lowered or not, then we have that as a backdrop as we start to look more specifically at announcements that might come in today. Okay, so now we can look at the economic calendar. Let's see what fundamental news is coming in that's scheduled. Remember, that's the one type of fundamental news we can look at on an economic calendar, is what do we know is coming. And so let's go and look at today first, today being the 8th. And on the economic calendar, you pick your date range, you pick the countries you want to look at, you pick the level of announcements you want to see. I've chosen medium and high level. I'm not so interested in looking at the low level announcements because they tend to move the charts less. They have less effect on price movements on the charts. So medium and high tend to have decent effect on volatility and movement in the currency pairs that are related to the country for which the announcement came in. So these already occurred back here. So we might move forward and look at something that has not. Initial jobless claims coming out of the US. It's interesting because some of these announcements cause volatility, but not predictability, and others do have predictability. And we'll, as we analyze these numbers, you'll see what I'm talking about. So if we want to pick the currency pair to analyze, they're all USD pairings because it's a US announcement. So we can look at Euro USD maybe. We can pick the time frame after each of the past announcements that we want this system to analyze the chart movements after each of those past announcements. So how long after each announcement in the past, when the initial jobless claims numbers came out, do I want to analyze? We can go as little as 5 minutes. We can go as much as 4 hours with this tool. So I'm going to choose 4 hours initially here. And then we can qualify which events do we want to look at. All of them? Or do we want to look at only those that came in above forecast, below forecast, or matching the forecast? So let's look at each. If these come in above forecast, meaning worse than expected, right? We're talking about jobless claims, not increases in jobs, but increases in jobless claims, meaning more people not having work or applying for unemployment benefits. So if that goes up, that's typically deemed, not good economic news for the country whose announcement it is. So if we have bad news here on jobless claims, meaning they're higher than expected, the result 60% of the time is the USD pulls the euro down in the 4 hours after the event. Okay, and pretty much each of these dropped the same amount. All three, it's pretty consistent. 1, 2, 3. Okay, right around 43, 44 pips of dropping with a range movement of 56. So that means if the range was 56, but it dropped 44 or so, then maybe it spiked 12 pips up before it went down. Okay, so the range movement, 56 pips or so, each of these dropped around 43, 44 pips in the 4 hours following. The ones that went up, one of them barely climbed and maybe likely even dropped after that. There's only one that actually continued in the wrong direction in a significant amount. And about the same distance move, under 50 pips is about 47 pips or so, 48 pips. So we see the majority of the time then selling if these numbers come in above expectation with the USD strengthening. Now what's interesting here is sometimes it doesn't matter which way it came in. And what I mean is if it came in below forecast, did the same thing happen? Below forecast, it not only happened, but a larger percentage of the time. So 71% of the time, if this came in below forecast, meaning good news economically, less jobless claims than expected, still the USD strengthened, but you see it was less consistent. And consistency is important because look at the size of the climb the 2 times it went the wrong way. On average, larger than the size of the drop. So in the 4 hours after, sure, it went down 71% of the time, but 3 of those times it just barely moved down. 1, 2, 3. Only twice was it a more significant move, and both of those were less than the largest move up. So overall, the downward movement was not as consistent or significant per movement when the numbers came in as good news. And that kind of makes sense because the US dollar tends to weaken when there's good news and tends to strengthen when there's bad news because bad news creates fear. And when there's fear, safe haven currencies tend to strengthen. And the USD has been a safe haven currency that tends to strengthen when there's fear economically. Okay, so what we're looking at here is less consistent downward movement in terms of distance when it comes in below forecast, but a higher percent probability of some movement down. But when it comes in above forecast, a more consistent drop, almost exactly the same amount of drop, and it dropped 60% of the time. Okay, so you make what you will of those statistics. Okay, if I'm looking at this and thinking about trading, I think I might prefer to sell on this if this data came in above forecast with a short stop loss to get above this one. So if it went further than that, I'm out. If it's this one, I would take the loss on that one. But on the other 4, I would have been in up to 4 hours after to see where I could have come out, how much profit. Okay. With the other circumstance, most of those droppings, well, even though it was 71%, were really small. Okay. These were consistently between 40 and 50 pips, around 44 pips. And then another thing you can check is how far did it move in the first 5 minutes, maybe after the announcement? Do you have time to place the trade? And if you look, you see that indeed, yes. The furthest that it dropped in the first 5 minutes on any of them was less than 4 pips, right around 4 pips on this one. The rest of them were up in the first 5 minutes. So then if you had sold each time, you see after 4 hours, you're in the profit actually on 4 of them. Because this one was up even higher in the first 5 minutes and then pulled back. And all of these were way up here in the first 5 minutes and then dropped 40 to 50 pips. Okay, only once would you have lost. So that's why I like this setup for if it comes in above forecast, the statistics look better from the past to say if it comes in above forecast today, if I can get in before it drops more than 5 pips, I might put a take profit 40 pips down, the stop loss 15 pips up, and see what happens. Because statistically in the past, it looks like I would have at least had some significant profit 3 out of 5 times, and maybe even 4 out of 5 times. Okay? If it comes in matching the forecast, well, we saw above and below, they both dropped. So we know matching the forecast, it didn't happen at all. Okay? And if we say all events, well, that includes the above and below. So all events, we see that it dropped more than it went up. But as you start to analyze, the above forecast looks more consistent. Okay? Any questions, comments before we move to another example? Okay, I'll keep an eye out if anything pops up, but this looks like a pretty consistent movement when you have such a similarity between those that went down in terms of distance, timing, etc. All right, so that's a high-level announcement coming up soon today, okay, just in a couple hours. And then I don't see any other high-level. There's some medium-level announcements. Nothing that jumps out at me as being an event that's highly traded. So let's look at tomorrow. So we're on the 9th, and there are a number of high-level events. I like to look for the larger economies. So some of these are high-level, but they're not highly traded country announcements necessarily. Germany definitely is something that, it's a large economy in the European Union, and so we'll take a look even at medium-level announcements. Should have some importance level to them. But what kind of consistency do we have? If we look at Euro USD 4 hours after the event, if we say if this comes in above forecast, meaning higher than expected inflation rate, it hasn't happened. Okay? Sometimes they're so good at predicting what the upcoming inflation numbers will be that they don't come in above or below forecast. You see, neither of those have happened recently. They've all matched the forecast. And when it comes in matching the forecast, predictably, it goes up and down evenly because there's no surprise if it comes in matching the forecast. So I don't have data here that tells me I'd be interested in trading because it's anyone's guess if it comes in matching the forecast, which way will it go? Half the time it goes up, half the time it goes down. Okay? So this is one where you're using the past data to show that I don't have a strong indication which way to trade. Now, if it comes in higher than expected or lower than expected, you likely could have big movements, but we don't have data showing us how big or what percent of the time it'll go which direction because that hasn't happened in the recent history, missing the forecast. Okay, and it's the same, I think, for the year over year. Let's see. I think it's matched also. You see, matching the forecast. All of them came in matching, and it's 50-50 up and down. Okay, so we'll skip over these, not because they're medium level, but because there's no data giving me an advantage, in my mind, one direction or another. Okay, we'll skip over Hungary, Italy. Not that those aren't lovely countries, but I'm looking for the larger economies. Belgium. Let's look at Canada. Okay. Canada's interesting, highly dependent on crude oil exports as a part of their GDP. Interesting movements against the USD a lot of times. If we look at it looks like jobs numbers coming in, unemployment change, full-time employment change, unemployment rate, labor participation. Let's look at the employment change here for January. And so this is interesting because what we see here, if we look at all of the events, look at all the red. 92% of the time with these events, the USD has dropped against the Canadian, okay, in the recent history. And if we look at above forecast, it's 100% of the time. If these numbers come in higher than expected, the history shows a consistent strengthening of the Canadian dollar. And we're talking 68 pip movement in the first 5 minutes, It's already dropped near 30 pips, but we see after 4 hours on average, the range jumps to almost 68 pips. So there'll be an initial move that's quick, that's rapid, based on the past in the first 5 minutes, consistently down in the past. One of them spiked up, but still within 40 pips or less, typically in that first 5 minutes. And maybe you can get in quicker before it would go that distance. And after 4 hours, consistently, we've seen finishing down with a range movement of near 68 pips. But you see some of these finished only 14 pips down. See this, 14 pips, 14 pips. This one, 34 pips. And remember, in the first 5 minutes, it was already almost 40 pips. So even though they all finished down, some of these pulled back from 30 or 40 pips to only being 14 pips after 4 hours. So you have to be cognizant of what entry point can you catch. Even if you expect it to move downward the majority of the time, if it already moved 30 or 40 pips, maybe you don't get in. If it's moved less, 5 pips, 10 pips, maybe you're interested in trying to see if then this type of movement carries out over the next few hours. Okay? But very interesting data here that regardless of how this comes in, now above forecast is more consistent, 100%. Below forecast, less consistent, 2 out of 3, but larger range movement, 75 pips, as opposed to like 69 pip range movement. Okay? So make what you will of that, but that's an interesting set of data that seems to be strongly leaning towards a strengthening Canadian dollar against the USD with this particular announcement. Okay? So these are the sorts of things you can start to gain insight from a fundamental news perspective to do timed trades after specific announcements that you've already analyzed in advance, the statistics surrounding it in the past, and have decided that maybe you feel there's a statistical advantage to trade in one direction or another based on how the announcement comes in, and gaining that insight from how did it move the past times that the announcement came in that way. Okay? If you have questions, I'll assume that you will type those in, because I saw so far answers that said, okay, so far so good. All right, so if you need me to pause, let me know. I'll go ahead and carry on. So where else can we look for fundamental news? Well, we do have market buzz. And this is nice. The market buzz combines technical analysis and fundamentals. And what I mean by that is, once we decide what we're interested in looking at, whether it's a stock or cryptocurrencies, the pictogram shows that the ones in the largest bubble have the most mentions and trending online that was found with news articles and information. Okay, and many times the ones that are trending the most have maybe the better price action on the chart. Not always, but many times that's the case. And so whether you're trading on cryptocurrencies, commodities, we can see what's trending the most online, and then we can start to look at fundamental news that's related to that. So I might say, well, what's going on with Apple? Why is it in the news so much right now? And so if I click on Apple, that will load a page dedicated to Apple, where it has news articles that have come out recently, 8 hours ago, 15 hours ago, 16 hours, etc. The newer ones are on top, the older ones as you scroll down. And also there's a technical breakdown here within this information of a prediction from Trading Central. Technically speaking, which way is this expected to move? And it says price may fall 9.5%. Okay, we know going into the day today, we kind of did an overview of how we felt fundamentally, and it seems to be that there's been upward momentum because of upbeat earnings data that's come out from different companies, but also there's a bit of fear today, because the better the data, the more there's fear that interest rates won't go down anytime soon. And so right now we see a prediction that maybe Apple could pull back as much as 9.5%. If you want to see the technical analysis on that, click on the trend analysis and it gives you the signal. shows you the resistance levels up here, the direction that they expect it to move. The take profit suggestions are the red lines here, where they think it could drop to, which are the next support levels from the past, where it might have trouble dropping further. So this is a move you could make just from a technical perspective. If you think the fundamental news also ties into that, then that may help make up your mind to follow this signal. I would read some articles about Apple and see if the fundamental news helps convince you as well to go with this technical signal. And the blue line basically is where you might put your stop loss above that, because that's what they call the pivot line in this signal. If the move goes above that line, then they're saying something must have changed with the momentum to be able to break to that price. Then they say look for further upside towards these green lines where you might take profit. So even if you decided to sell, you might have your stop loss up here with a pending order to buy if it breaks above the blue line, with take profits up at these green lines. Okay, that's the way the technical signal is broken down. And if you read that window that I just closed, it also breaks down the technical indicators that were used. RSI, stochastic indicator, whatever was used in that signal, they break it down, what it was showing with the technical indicators as well. Okay, so this is for those who want to look at the technical analysis and then combine that with the fundamental news. Okay, so Apple's Vision Pro headset, it's a new virtual reality headset that they're saying blows away anything else that's been out. At least that's some of the reviews I read. And so maybe this is a story that if you read it, and here's a synopsis of it from Bloomberg, and you can click story continues to see the entire article. Okay, it's being resold for $5,000 overseas. That's resold for $5,000. What's the initial buying price then? Obviously higher. So you can read an article about that, and that can help you decide whether, do you think that's good news for Apple, bad news? Does that help you decide that you'd want to sell with this signal, or does it work against the signal? And if it works with the signal, whatever it is you read, maybe as you read that article, it's saying something bad about why they're selling for $5,000 overseas. Maybe they're having trouble selling them for more. Maybe there's not enough demand. I don't know. Read the article, right? And then read a couple more articles. And if you think the articles create negative sentiment for Apple, and then you also look and see that the signal is saying to sell, then maybe that's part of your checklist of determining to make a move on a signal. Look at the fundamental news. Does it agree with the technical signal? And if yes, then when the market opens in the US, if you like the entry price, maybe you trade. Okay, so this is an easy way to start to create a list of things that you might want to act on based on fundamental news and technical signals. All right, and if there are any questions, please let me know. I'll just continue to move on. I don't see anyone dropping out, so it must be interesting what we're covering, but I don't see questions either, so I must be clear. All right, so I see another article there that said something about someone suing Google or Amazon or something. So you might read some more of those articles. They might be in line with the negative sentiment that were in that signal. Okay, so if we're looking for other ideas, we can go to the news feed. That's this tool here. Okay, it says news. If we click on that. Oh, I clicked on the wrong one. This is the news. That's the signal list. News, this one. Okay, it gives a news feed of recent news. Rather than looking at articles for a specific instrument like we did in the Market Buzz, you can just look at all of the news feed, and it gives you recent news for all instruments in a news feed, summarized for you. So you're not reading the articles here yourself. You're just reading a summary of economic announcements from the economic calendar that already came in or that are upcoming, a summary of recent news and articles kind of put together for you in a news feed. Okay, so you can read through quickly this information, pre-European market brief. It's talking about China's CPI dropping, PPI fell as expected, and kind of analyzes that for you, and then lists instruments that might be related to that you could trade on. Okay, so the related instruments here are USD pairings. reacting to the news out of China. Okay, so read the article. It might give you a bearing on what you might want to trade on. Okay, and so here's news about crude oil, news about the Hang Seng Index, etc. Okay, so a different way of looking at the news that's coming off the economic calendar and the market buzz articles, kind of summarized for you here. Okay, and so there's a lot to look at here, but it's very efficient to look at it and be able to put together a trading plan for the day and for the week. Okay, in the economic calendar, you can look at over the weekend for next week, for example, and be ready to know which announcements looked good statistically to have an advantage that if they come in a certain way, you'll trade, and have that outlined for the whole week before the trading week even starts. Okay, any questions, comments before we end things today? Okay, great. I guess we didn't get to the point of simulating any trades. We were looking at maybe some instruments that weren't open yet with the market buzz, with the U.S. stocks we looked at. Had we looked at something that was open, maybe we would have simulated a live move. But maybe next time we'll get some live moves going. But you have some things to be prepared for anyways for upcoming announcements today, and also for maybe some instruments you could look at in the market buzz that'll be tradable when the U.S. market opens. But you also could look at the European stocks in the market buzz, or other instruments that are trading live now to make some live moves as well. All right, everybody, thank you for joining. Good luck with your trading the rest of the week. Bye for now.